and the fourth is credit profile. Now, I'm going to go through each one of these individually and all of the key points for you to note and be aware of. So the first being the residency status and potentially visa status. It is possible to get a mortgage when you're on a visa, so that's really not a problem. So what are lenders actually looking out for? The first is the visa type. Now, a lot of visa types are acceptable. So as it mentions on the screen, skilled worker, health and social care, graduate, spousal, dependent visas are all commonly accepted. And there are other visa types that can be accepted as well. The next thing they're looking at is the length of time that you've spent in the UK. So if you had been in the UK for less than 12 months, the options are rather limited. But as soon as you go past that, there are a lot more lending options that open up. And this can be with as low as 5% deposit as well. The last thing they're looking for is the time remaining on the visa itself. So most lenders will require at least 6 months remaining on the visa. Some have 12 months minimum requirements, whereas there are a few, and it is a fair few, that can accept as little as 3 months remaining on the visa. So it really does depend, but that gives you a general idea of what they're looking for. Now, the next pillar is the deposit. And this part is really important. And it also leads into one of the biggest myths I always hear on this topic, which is you need a 25% deposit if you're on a visa in the UK. And the fact of the matter is you don't need that much deposit. It's possible to do with as little as 5% deposit, or with a lot of lenders, it would be 10%. So what you can actually do if you're looking at potentially getting help for, let's say you're wanting to buy a new build property, many developers actually provide what's called a deposit contribution. So that would be 5% that can contribute towards your deposit amount. So if you had saved 5% yourself and then had another 5% that was going to add to that, that in total, of course, would combine to a 10% deposit. Sorry, I'm just going to pause. I think there's someone who's unmuted, so I just wanted to try and mute them. Oh, there we go. Cool. Okay, great. Fine. So thanks for that, by the way. What also matters, it's not just your size of the deposit, but it's also where that's coming from. So this is something we have to be really careful about, and it is a big issue sometimes. Now, gifts from family can be completely fine. We can also work with funds that have come from abroad. So that's not necessarily an issue. It's just we need to prove where they've come from. But it's important to avoid using kind of your deposit from systems. So, for example, revolving savings schemes or agile, also called many other things, because what that causes is issues for lenders in terms of understanding where the money's come from. So if it's been sent into your account from multiple different people, it's very hard for them to actually know where did that money originate from. So if you compare that to you saved up the money each month through work, it's a lot easier for them to understand. Now, the next pillar is your income. So there's a lot that matters here. It's not just the number. It also matters how you're paid. So, right, the contracts type. So if you're on a permanent employment contract, potentially a 0 hours contract, how long you've been in the job, is it salary or hourly pay? There's lots of factors there. What also matters are your expenses. So it's not just the income, but then also your expenditure, and dependents count in that as well. So it can be things like credit cards, loans, childcare costs, and dependents. Now, the calculation of how much you can borrow isn't an exact one if I'm giving it as kind of general advice, right? So on the screen, I've put it's usually between 4.5 to 5 times your income. It depends on a lot, right? Because your expenses, if those are high, if you've got large credit card balances, that can always take away from it. Now, the last pillar is your credit profile. So people always ask me, what is a good credit score? Now, the important thing to say is there's no specific score that necessarily means you're definitely going to get a mortgage with a specific lender. And that's because there are so many different credit reference agencies that use unique scoring models. And that just means there is no single perfect score for you to have. Of course, the higher the credit score, better, but there's no specific metric. What also matters is what the lenders can see. So it's not just the score, but it's also then your payment conduct. So if you've had credit cards and loans, if there have been missed payments on those, that can cause issues. So they're also looking at your whole credit history rather than just your credit score. Now, the only true way of understanding if you would get a mortgage or not, really, about your credit profile, is getting an agreement in principle. And that's because they would do a soft credit check. And the soft credit check will ensure that you pass the credit check. Of course, if you don't, that is something that we would then understand, look at the credit profile, and be able to deal with. But I wanted to give you a couple of common mistakes that people make. So the first I would say is not working with a specialist advisor. And we see this all the time. So we see this with clients that have initially tried for quite some time, worked with a couple of different mortgage brokers, and they're of course generic brokers, and they've missed key details to do with visa situation and an income. And that means that they've been through weeks and weeks of delays, they've spent money, and they've got nowhere. They've not been able to secure their mortgage offer. So I would say it's far better to avoid doing that in total and working with a specialist advisor like ourselves, who solely work with people that have moved over to the UK, can save you so much time and make things a lot easier. Now, looking out for missed payments on your credit profile and really trying to prevent that from happening is another one, because one missed payment can ruin your chances or at least make things a lot more difficult. So it's important to stay on top of things. If you have any credit cards, loans, etc., it's just important to always make sure that you're paying those back and on time. Finally, is the poor deposit planning, right? So this is a mistake we see often. I'll go back to what I was saying about revolving savings schemes. Having a deposit proof that has kind of large transactions coming into your bank account from other people makes it incredibly difficult. So it's far easier if you can make sure when you're wanting to go ahead with your mortgage that you've got at least 6 month bank statements that are, I would say, clean and easy to look at in terms of your income's coming in. You can see money is being built up and saved within that.
Yes.
So what I'm going to talk you through now is the home buying process. And this is specifically the home buying process in England and Wales. Now, it does differ slightly in Scotland, so hence why I specify that. But for the most part, they're quite similar. There's just a few key differences, but we'll focus on England and Wales today. So the first three stages is all about getting mortgage ready and finding a property. So the first step you would want to take once you're ready, you've started to get your deposit together, you're thinking, actually, I'm going to want to move ahead in the next couple of months. That is the stage where we would want to get the agreement in principle. Now, the agreement in principle is where we would go to a lender, submit a kind of pre-application with them. They would do a soft credit check and then they will give us a certificate. And that will decide how much you can borrow, and it will also check the credit profile. So it's an important stage to take early on. Once you have that, you can then move to the second stage, and that is going out and finding a property. So what you can use for that are websites like Rightmove and Zoopla, because you can start to look for properties online. So you want to do the basis of your research online. And then once you've identified an area that you like and some properties that you like, you can start to go and view those in person. Now, let's say you find a property that you really like and you want to put an offer forward. So this is where the negotiation would happen. And this would be yourself dealing with the estate agent. So the estate agent is the person that works on behalf of the seller. And you might find a property, let's say, for £250,000, and then let's say you put an offer in at £230,000, and they might come back with a counter offer of £240,000, for example. There can sometimes be a bit of negotiation there. You won't always be able to get a property for below the price it's listed for. It will just depend on how much demand they have on the property, um, how many people are actually looking at that property at the time, etc. So there are quite a few different factors involved. Now, the next step, let's say you have an offer accepted on a property. This is where you would do the mortgage application. There's normally about 2 to 3 weeks of process there where the lender is checking the documents. They are doing a valuation on the property you're buying. So that's to make sure it's worth the amount that you're paying for it. And then they're also doing their final checks and then finally issuing the full mortgage offer. So the full mortgage offer is the document you'll need to end up completing on the property, because that is what the document is where the bank says, yes, we are happy to lend you money. Once you've got the mortgage offer, the legal process will start. The solicitor will work on searches. So that's looking at the background information of the property to make sure there's no issues. The contract, that's of course what you would end up signing, and that will agree that the property is yours. And then they will do some inquiries. So inquiries are just any questions that they have for the seller based on the information that they've seen. So they would speak with the seller's solicitors as well in order to kind of overcome that part. At that stage, you might also want to get a survey done. So a survey, and you can get a home buyer's survey, you can get a full structural survey. The one that's best for you will depend on the property condition normally. So if the property condition is really quite bad and the property is quite old, then a building survey or a full structural survey might be better. That will give you an indication of any issues that the property might have. So they would give you a report, and that report works based on a traffic light system. And the traffic light system is green, meaning that area of the property is fine. So it might say the roof is green, that's fine. It would be amber, so that means that there are some issues. That means that there are some issues, but they might not need to be dealt with right now. And then it has a red, right? And the red is, okay, this is an urgent issue. So let's say it could say the boiler is red, and that would be a big warning sign that the boiler might need fixing straight away. Once you've concluded that process and hopefully there's no issues and everything's fine to proceed, at the point that it's fine to proceed, you would then exchange contracts. An exchange of contracts that's the point, all of the work's been done, you've got the mortgage offer, you're happy with all the legal work, you would then sign the contract and then exchange that with the seller's solicitor. At that stage, you would be able to set a completion date. Completion is when you would get the keys to the new property. Of course, that's the day that you've been going through this entire process for, is in order to get the keys to your new home. It's important to state that the monthly mortgage payments would start the month following completion. But if you were to complete, so you get the keys to your new property on the 15th of May, then you would normally pay your first monthly payment on the 1st of June. It does depend on the lender. So some lenders do it slightly differently, but for the majority of them, that's exactly how it works. Now, if you're listening to this and thinking, okay, this is great, I've got lots of information, but this sounds incredibly confusing, difficult, and you don't really know where to start, then this is exactly what we're here for. And this is what our entire service is built on, is to be the people that are just walking you through this process step by step together and making sure that you're not making costly mistakes and making the right decisions, importantly, at each stage. Now, we do have lots and lots of real clients and real success stories. So you can check us out on Trustpilot to be able to see some of our amazing stories of clients that we've helped. what they should be able to send around to you after this today is this one pager here, which has got our details on. So if you did want to get in touch and have a conversation about buying your own home in the UK, then you can book a consultation with one of our advisors through our website. You can also follow on Instagram and TikTok, and there are also our contact details down the bottom here. So that's pretty much it. If anyone's got any questions, of course, I'm here to stay on and answer those. Thanks for having me. It's obviously been good to be able to speak.
Thank you. Thank you very much, Ripley. So please, if you have any questions, can you indicate if you have a question, please? Do we have any question from Ripley?
I think there's one. If you can unmute yourself, Debola, then
okay. Please unmute yourself and ask the question.
Yeah, or put it on the chat. Up to you.
Thank you so much, Saguiro, for the session. Very, very to the point, direct to the point, and those are the critical things I was actually expecting regarding this session today. So I appreciate that. I just want to ask, so I want to know, what are the cost implications? You know, I know, of course, one has to plan for the mortgage itself, but what are the other additional costs that one should expect? I know sometimes somebody told me about having to pay some kind of stamp duty and all sorts. So I just want to know what kind of other costs one should expect in getting a house. Thank you.
Yeah, very good question, and thanks for the kind words as well. I'm glad it was useful. So in terms of the cost, so stamp duty, you are right, can be a cost, and it is one of the largest ones. So stamp duty is only payable if you're a first-time buyer over £300,000 of purchase price. The first-time buyer rule is based on properties that you own anywhere in the world. So that is something that can sometimes cause an issue. If you were, let's say you were a first-time buyer and the property value is more than £300,000, so that we could say £350,000, then you would pay a percentage of the amount above that. Now, I'm just going to get this up quickly. So if you were to buy at £350,000 a day, then the stamp duty amount would be £2,500 if you're a first-time buyer. So let's say that's a starting cost. Some of the other costs to consider are solicitors' fees. I would say that's like the whole legal costs, because it includes the solicitor's fees, but there are also some other legal costs involved, and that would be about £1,500 to £2,000. There could then be survey fees. So if you remember, I was just saying you might want to get a survey done. If you do that, that will be about £500, depending on the property value. You would then have like mortgage advisor fees. So for example, the fee that we charge later on in the process is £495. But that's pretty much it. So I normally say if there's no stamp duty involved, about £3,000 cover the fees involved. And then of course, stamp duty is just the next consideration. Hopefully that answers the question. I don't know if there's if that brought up anything else.
Yeah, thank you so much.
No problem. I can see one more in the chat as well. So can you please explain how mortgage rates work? Yeah, so that's a very good question. So to start at the base level, there are a couple of different types of mortgage products. Sorry, Neat. There's your sound is and it's echoing. Okay, I think he's muted. Sorry about that. I couldn't. I can't speak when my own voice is in my ears. Um, where was I? Right, mortgage rates. Okay, so at the base level, there are fixed rate mortgages and there are tracker rate or variable rate mortgages. And fixed rate means your rate of interest would stay the same for a specified period. And that is normally 2 years or 5 years. If we talk about the variable or tracker rates, those can go up and down depending on what the economy is doing, essentially. So those are a lot more risky. So for the vast majority of clients, we go for fixed rate mortgages because nobody really would want to go from having rent, at least normally the rent you pay is fixed for a year or two, um, and then go on to a monthly payment that can change all the time because it's very difficult to budget for. So if we look at fixed rates, you could say you're going on a fixed rate of interest for 2 years at the initial part of your mortgage. You might be thinking, so what happens for the rest of the mortgage term, the other 20, 25, 30 years? What happens when we get to the end of that initial fixed period is we would actually go to the market and we would have a look at the different options available again. And that is a process of remortgaging. So quite common actually to go from either a 2 year or a 5 year fixed rate onto another 2 year or 5 year fixed rate afterwards. And the reason we do that is to save you money, right? Because if you don't do that, you go on to a variable rate and it's really expensive. Um, Interest rates at the moment are varying around 4 to 5%, depending on deposit size. If you have a 10% deposit, it's about 4.6% roughly at the moment for visa holders, and maybe slightly less than that if you have permanent rights to reside. Any other questions at all? I can't see any others in the chat or any other hands up. I guess everyone wants to get back out in the sun, I think. Oh, there's another one. Okay. You mentioned thrift contributions, commonly known as adjuvant. Yeah, a few individuals may be saving towards the deposit using this strategy. Can you clarify that this is not allowed? Yeah, quite simply, it's not allowed. I know of people that have used it for their deposit, and I know that because every time I speak about this or bring it up, that people say, actually, I've used it. I went round every lender that accepts visa holders about 6 months ago and spoke to them about this and pushed it up the chain of command to see if there was anything they can do, and they all said no. So if that is disclosed to them as the source of the deposit, they will just decline it. The issue we get is that might not get spotted at the mortgage application stage. It could get spotted much later on in the legal process. So you could really be about a month away from moving into your new home and then everything falls apart. And the stage that would happen at is if the solicitor says they won't sign off your deposit, because your solicitor will have to sign off the deposit funds, stating that they are happy with the source of where they've come from. And again, the solicitor will be under instructions from the bank not to accept that. So people that do end up using it and it's fine, I would say that's the exception and not the rule. So I would just be careful if you do have that coming into your account, and it's contributing towards your deposit. Ideally, you need 6 months bank statements at least where that's not showing. Any other questions at all? Yeah, Debola, I think another one.
Yeah, so this Ajo thing is something that is really helpful for some of us, even though we might not have the plan of doing it for the purpose of buying a house. Because the way it works is more like, okay, I'm just saving my money. It's actually my money. It's not like someone is paying into my account. And so if one is able to explain that, do you think one can sail through the mortgage process? Because it's actually my money, just like I'm able to just get people to, not for the purpose of building my account, just to be able to accumulate funds.
I know.
So I won't have to spend anyhow. So that's just the purpose, yes.
Yeah, and I completely understand it. By the way, a lot of our clients, so I have a very large Nigerian client bank, so about 70% of our clients are Nigerian actually. So I do understand it, understand it very well, but unfortunately, because it would be money that's being sent into your account from someone else or from others, they just don't accept it. I understand it's your money, right? You might have sent £500 a month out to someone for a year, and then they've sent you £6,000 back, but they don't know where that money's come from. And in some of them, I know people do it differently, but some people, different people sending them the £500 in their month, and that doing it that way is even messier. So I do understand why it's done, and it makes complete sense. But yeah, from the bank's perspective and for the solicitor, they just wouldn't accept it.
So what's the best option you would recommend? Is it
It
just
really
to
needs Yeah, it really needs to be outside of the last 6 months bank statements. So the solicitor is normally going to look at 6 months bank statements when
okay,
verifying your deposit. So it needs to be outside of that. Or of course you can continue to do it. If you're not going to contribute that towards your deposit, I would just say do it in a separate bank account. So have that money coming in and out of a separate bank account that you're
okay,
not going to need to prove for your mortgage.
okay, okay. Thank you.
Yeah, no problem.
Mhm.
Do they accept contribution? Maybe we can say from friends and family after taking the ajo.
Yeah, so that is a good question. If it's family, it's different because it can be signed off as a gift. So lenders accept gifts from family. So we can sign it off as a gift quite easily if all of the money has come in from a direct family member. So like a sibling or a parent or whoever it may be. Um, if it's a friend, it's far more difficult. Not many lenders accept gifts from friends, and if you're on a visa, then no lenders accept gifts from friends. So it's a lot more difficult. But if it's a family member, that can help.
Okay. Um, I used to hear, I don't know if it's a mint, but people say that it's better to buy old builds than new builds. I don't know what notion do you have about that?
Yeah, I do think it's very much personal preference, right? With a new build, of course, what you can expect is you don't have to do any work. You move in straight away, it's all done. That's great, right? You should also expect that you would pay a premium, but the property is going to be far more expensive than an old build property in the same area. So that's another consideration. If you want to buy or you're looking at buying an old build, then you just need to expect that there is going to be some sort of maintenance that you'll need to do at some point, right? It probably in the first 5 years of owning it. But it's going to be a lot cheaper. So if you were to ask me my personal preference, I prefer older build properties, but not we don't have to go 100 years old versus brand new, right? You can go somewhere a bit more in the middle. So personally, I prefer properties that are not really, really old, quite new on the inside. So I think there is a balance that you can get.
Okay, last one, sorry.
No, no,
I
it's fine,
heard
please.
I heard that if you are going for code build, that you
Mm.
won't be able to get 5% deposit.
So do you mean you won't be able to get a contribution or you won't be able to use 5%?
I think it said you won't be able to use 5%. Mostly they go for 10% and above.
Yeah, that's not necessarily true. So we help a lot of our clients with 5% deposits on visas. The interest rates are quite a lot more expensive, so that's the only thing to be aware of. But yeah, it is possible to use a 5% deposit depending on your kind of wider situation.
Okay, so sorry, I heard that you said the interest rate is higher for whole
Mm.
build.
Now, the interest rate is higher if you're using a 5% deposit versus
Mm.
using a 10% deposit.
Okay.
Yeah. Perfect. I can see some other questions. Thanks. Sorry, did you have another question, by the way? I saw you just unmuted.
No, continue. Thank you. I just
Okay,
want to say
no,
thank you.
thank you. No problem. Good questions as well. So there's a couple in the chat. So what should someone with a bad credit score do to improve their chances of getting a mortgage? So there's a couple of things you can do. Realistically, the only thing that's going to heal it is time, which isn't very helpful because I know someone might want to kind of push ahead straight away. I would say that there are quite commonly options available, even if the cheapest lenders declines. There are other lenders that we can look at, so it might be possible to move ahead straight away. If not, then some time and not missing any monthly payments during that duration will help your credit score rebuild. And I would also say using a little bit of credit does help. It's important not to go out and take out 5 or 6 different credit cards. But if you have one credit card and use a very small amount, so let's say if there was a £1,000 credit limit, just use £100 in a month on the card and just pay it off in full at the end of each month. That can help to build up the credit score quite drastically. Having things like utility bills and phone bills as well will help build credit profile. But it's just important not to miss any payments. Next question is, are there specific mortgage schemes or support available for first-time buyers in the UK? Um, there are a couple. In all honesty, there's none that are that great. There used to be one with the Help to Buy scheme. There still is in Wales, although it's just finishing, which was really good, but they've stopped it. Um, Shared ownership is a first-time buyer scheme that can be used, but I don't necessarily recommend using it unless you have to. And there is a first homes scheme where you buy a property at a discount, that would be at a 30% discount normally. And then you have to give that discount back to the person that you sell it on to. So it just helps you to live in a property that's more expensive than what you might be able to afford. The issue we find with that is that there isn't that many properties available under that scheme. The next question is, how do lenders view self-employed applicants or those on 0 hours contracts? Yeah, so self-employed is completely fine. You can get a mortgage with self-employment income, even if you're on a visa in the UK. Typically, they would need 2 years proof of that income, though. For 0 hours contract, you need to be or have worked on that for at least 12 months. If it's NHS, so if it's NHS bank work, it can be slightly different. So some lenders will allow 6 months minimum. Is it harder to get a mortgage with multiple income sources or side gigs? So I would straight away pick out side gigs and say those can be very difficult to use unless you're doing the tax documentation correctly. Multiple sources of income is fine. So if you've got a second job, it can be quite easy to use. So that's not necessarily a problem. Next question is, do you think now is a good time to buy or should we wait due to market conditions? There's absolutely no reason to be waiting due to market conditions ever, to be honest. Unless interest rates were like 7%, then you might think, oh, I might wait. But no, I mean, the time to buy your own home, in my opinion, the sooner the better because you're presumably currently renting. And at that point, you're throwing money away on rent when it could be your own mortgage and you could be building up equity in the property. Next question is, how long does the mortgage approval process typically take? So the agreement in principle process initially normally just takes a couple of days. The full application process, once you've found a property, normally takes 2 to 3 weeks. And that's the mortgage side. Of course, there is then the legal process, which takes time. And that's what normally makes the process take kind of a couple of months. Next question is it true that civil servants can get mortgage with 5% down payment? And does that also increase the interest rate too? So it's true that anyone can get a mortgage with a 5% down payment. So the facts of being a civil servant doesn't actually make any difference to that. The interest rates are much more expensive. So as I was mentioning a few moments ago, especially if you're on a visa in the UK, it does make the interest rates quite a lot higher. So if it was the case where you've got 5% now, but in 3 or 4 months' time you will have 10% deposit, I would say waiting to get that amount would be a very good idea because your interest rate and your monthly payments would be so much lower. And then the second to last question, I think, so can a first time buyer do a buy to rent mortgage? You can. If you're a visa holder, you still can, but the interest rates again are quite high. You also need a much larger deposit to do buy to let, which is buy to rent, because you're buying it to let it out to someone else. And the issue with that is you need 25% deposit. So if you're buying a property for 200,000, you need £50,000 deposit. Um, and in my opinion, buying your own home first is a much better move because it gets you away from renting. You start building up equity in your own home. That's a really good way of starting to build wealth. And then you can look at investment properties after that. Hi, Oliver Cola. I can see your hand up. Nice to see you here as well.
Hi, Replay. Good afternoon.
Hi.
Oh, thanks for taking this session. Please, I want to ask, can you please elaborate on shared ownership? Because I've heard history of endless payments and the likes. So I would want you to shed more light to that aspect. Thank you.
Yeah. So shared ownership I don't really like as a scheme. What it means is, for anyone that doesn't know, is for example, there might be a property that is worth £200,000. Shared ownership could allow you to buy 50% of the property. So you could buy the property for £100,000, but then you rent the other 50%. And what that means is you're paying mortgage on the 50% that you bought, and then you're paying rent on the other 50%. And there are also typically quite high service charges involved as well. And those have been known to increase massively. So people get caught out with that and it can be a bit of an issue. Um, so with that, I don't really like it as a scheme unless you need it to buy the property that you need. So, for example, if you have a big family, you do a four-bedroom house, but you couldn't afford it unless you use shared ownership, it can be a good way of making sure you've got enough space for your family. But other than that, I don't really like it because of all the additional costs involved.
Thank you.
I think there's one extra question that's come up. So, how many years mortgage length would you advise buyer over the age of 40 to go for? Does it affect the rate? So, firstly, it doesn't affect the interest rate. Unless we were trying to stretch it until a really old age, then it might. If you were, normally we want to end the mortgage at about age 69 at the oldest. So if you're 40, that would be 29 years as a maximum mortgage term. But of course, there are more factors involved with that as well. Any other questions at all?
Oh, sorry. I want to ask that. You said the interest rate is usually high for someone who doesn't have permanent residency. How high is it compared to the person that has permanent residency?
Just to clarify, I was saying that if you're on a visa, so if you don't have permanent rights to reside, they're more expensive with a 5% deposit. If you have a 10% deposit, they're really not more expensive at all. So it's just with a 5% deposit, they're more expensive. To answer your question, if you had permanent rights to reside with a 5% deposit, you would expect to get about 5.2% roughly at the moment. Whereas on a visa, it would be about 5.8%. So it's an increase, but I mean, it wouldn't be a huge increase on monthly payments. Whereas with a 10% deposit, the interest rates are a lot closer to 4.5%, and it doesn't really make a difference whether you have permanent rights to reside or not.
Okay, thank you.
All right, thanks. Any other questions?
Yeah, I was just going to ask, but you touched on that earlier on the question about the people who are over age 40. So what is the best? I just want to ask for your own kind of advice. What's the best option if one is over 40, probably close to age 50, and one wants to get a house here in the UK?
Just know that it is possible, and I get people all the time asking me and think it's starting to think, oh, it's not going to be possible. I mean, I have clients that are 50, 55 sometimes, or even older. I've got a client at the moment buying a property who's 60. So it is still possible. The older that you get, the shorter the mortgage term needs to be. And that is the only thing that causes some issues because it means that the monthly payments are then going to be higher. So that then means that your affordability, the amount that you can actually borrow, might decrease a bit. But if you're between the age of 40 and 50, um, I don't think that's going to end up being a huge problem at all. I would just say definitely working towards buying somewhere in the next couple of years is going to be a very good thing to do. You get onto the property ladder, you start building up that equity, and that will go a very long way for you, I'm sure.
Okay. Thank you.
Any
There
other?
is hope.
There is hope. There is hope. Any other questions at all?
Just the
We can
final
always
one.
reach out to you, right?
Oh,
One on
sorry.
one. I said we can always reach out to you on your phone one on one.
You can always reach out. So I think they're going to send around that last slide, which has got kind of contact details, website, etc. on there. So you can always reach out. Yeah.
Okay.
Was there another question? I don't know if two people started speaking at the same time.
I do have a question. So,
Hmm.
should you be on a mortgage, like if acquired the house already, and are you allowed to do some sort of maybe partitioning to the house, any renovation to the house at all? Would it affect the mortgage you're currently paying? Saying, for instance, now one got like a 2 bedroom, and then you eventually converted it to like a 3 bedroom. Would it affect what you're paying subsequently, or what you're going to be paying is what you're going to be paying, irrespective of the renovation that is being done in the property?
Yeah. So it wouldn't cause any effect to your monthly payment. So as long as you didn't go out and take a loan, for example, of course, if you go and take a loan to do the work, then you're going to have to pay the loan, right? But if you just pay for the renovations yourself, it won't affect your mortgage at all.
Okay, so piggybacking on that, so are you allowed to like sublet a part of the property?
Yeah, so I mean, if it's a bed one, but so let's say you have a 3 bed and you want to rent out 1 bedroom, it's really normally not an issue at all to a lender.
Okay, thank you.
No problem. I've just seen in the chat, just ask about what's the answer to 5% deposits, and the interest rate. So with that, I was saying that yes, it's fine. So the question is it true that civil servants can get a mortgage with a 5% down payment? The answer is anyone can potentially get a mortgage with a 5% down payment. I was explaining that if you're on a visa in the UK, then the interest rates can be a lot higher with specifically a 5% deposit. But it does depend on a few factors. It does depend on a few factors. And the interest rate, yeah, increases. It definitely, if you're on a visa, and also if you've got permanent rights, it's still going to be slightly higher than if you use a 10% deposit, but not as much. Hopefully that clears that up, Bella. Great. I think that is all the questions. I don't know if anyone else had any others.
Yeah, I do.
Yep.
So should you have a mortgage for, let's say, 20 years, and you decide you want to pay it off earlier than that, is there any penalty for that?
When you're within a fixed period on your mortgage, there are early repayment charges, but you can overpay. So it's what we call overpayments. You can overpay up to 10% of the remaining mortgage balance each year without incurring those fees. So as an example, if you have a mortgage of £100,000, in that first year, you could overpay £10,000. So you could pay off £10,000 of that mortgage without incurring any fees. When you're outside of a fixed rate, you can overpay as much as you like. So essentially, yes, you can pay off the mortgage. We just have to kind of time it depending on the amounts that you want to do, but you can pay it off much, much faster.
Thank you.
No problem. Any others at all? No? Okay.
So is that your personal phone number, or anybody can pick it when we reach out?
That is actually my personal my mobile number for WhatsApp. So if you message that, that will be me.
Okay.
Yeah.
Thank you.
Right. Nee or Chica, I don't know if you were planning on or wanting to wrap up.
Okay. Thank you very much, Ripley. Thank you for such an engaging section and very enlightening. Thank you and God bless you. So his details has been shared on the screen. We can copy those details if we have further questions or clarifications. Thank you very much, everyone, for participating in today's masterclass. Quickly, I want to remind us of our pre-MIM service for tomorrow, prophetic sound. So usher us into the MIM week. It's going to be a global service and it's starting by 9 a.m. Please, let's make plans to attend. It's going to be streamed live on our social media platform, YouTube and Facebook. And also, MIM is starting next week, Wednesday through to Sunday. It will also be streamed live. So please, let's make plans to attend. We don't want to miss MIM. It's our yearly world conference. It's going to be streamed live on at God's Chamber. Thank you, Ma Debolale Moshe, for that. It's going to be streamed live on at God's Chamber. So please, let's follow up with the program. And we also have Praise Fest that comes up every last Friday of the month. It's a praise vigil. It's a praise vigil, and we've had 2 sections. It's been powerful. Let's start preparing for the next one that'll be happening this month. And we always stream live on YouTube and Facebook too. Same goes with our weekly service. We have Wednesday Connect service starting by 7 p.m. It's an online service streamed on our social media platform. If they're not following us on Facebook or YouTube, you're doing the wrong thing. It's wrong. So please follow us on all social media platforms at GCS and P. That's our social media handle. We're on TikTok, Facebook, Instagram, and YouTube. And then our Sunday service, we have our physical service every Sunday, 10:30 a.m. If you cannot meet up with the physical service, you can also follow us online. The physical service holds at Tingley Community Center, Smith Lane, Tingley Leeds, every Sunday by 10:30 a.m. God bless you. Pastor Nee, do you have any other thing you want to add before we call it a day?
No, I don't. You've done a very good job. Please wrap it up. Thank you.
Okay. All right. Thank you very much. So please let's say a word of prayer as we close the meeting. Father, I want to thank you for this beautiful class. Thank you for starting with us and ending with us. Thank you for enablement to go to do the needful, the resources we need, the wisdom we need to apply everything we've learned today. We believe that you will grant to us in Jesus' name. And even as we get ready for MIM, we pray that this meeting will not end this meeting the way we'll be starting in the name of Jesus. At the end of MIM, your name alone will be glorified in the name of Jesus. Thank you for Mr. Ripley. Thank you for him being a vessel to us this evening. We pray you meet him at the very point of his needs in Jesus' name. In
Amen.
Jesus' mighty name, we have prayed.
Amen.
Amen.
And
Thank you
You
for
guys should go
organizing.
enjoy the weather.
Thank you.
Thank you all.
Yeah,
Ripley,
but
take
that's really
care.
good.
Have a
Thank you.
fantastic weekend. Go
Thank
enjoy the
you.
sun
Bye.
before it disappears.
Thank
I will
Thank
do.
you.
Thanks for having me. Thank you all.
Yeah,
All
thank
right.
you.
Take care.
Bye-bye.
All right. Bye.
Thank
Bye.
you,
Bye.
SMP.
Bye.
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 Thank you.
Bye. Thank you for organizing. Thank you.